Hello, everyone, and welcome to VRIGHT Wall Conversations, a curated leadership dialogue series hosted by VRIGHT Exchange under the VRIGHT Academy Series. I am Rana Aryan, co-founder of VRIGHT Exchange, and it's a pleasure to host today's session. At VRIGHT Exchange, we believe that in a world of overflowing with information, opinions, and market noise, the real comparative advantage lies in the quality of thinking and decision making. Today, we are delighted to host Mr. Jitendra Kumar Gupta, investor, author, financial writer, commentator, and student of multidisciplinary thinking, whose book, Charlie Munger's 9 Tools to Improve Our Thinking Ability Considerably, translates the timeless wisdom of Charlie Munger into a practical framework for investors, business leaders, founders, professionals, and lifelong learners. The book distills some of the Munger's most powerful mental models into actionable tools that help improve judgment, reduce decision-making errors, overcome cognitive biases, and build a long-term perspective in an increasingly complex world. What makes this initiative even more meaningful is that 100% of the proceeds from the book are dedicated to charitable causes, reflecting the belief that knowledge, success, and social impact can create value together. The book has also received appreciation from respected market veterans, including Mr. Vijay Kedia and Chetan Parekh, who have highlighted its ability to simplify complex thinking frameworks into practical lessons that can be applied in real life. Jitendra ji, thank you for joining us.
Thanks a lot, Ranaji, providing me this opportunity. I'm really grateful for you. And we really want to share some of the thoughts from the book. And I want to share the wisdom from the book so that everybody can benefit.
All right. So the first question, the why behind the book. What inspired you to distill Charlie Munger's thinking into a structured, practical guide at this point in your journey?
You made a very important question. About, I think, 4-5 years back, I was struggling with this particular phenomena where I was, I was not able to I was not clear. I was not able to express myself, and I was looking for something that, how can we improve our thinking ability? How can we structure our mind so that we can utilize it efficiently, and we can actually start thinking very clearly. We have a lot of information, knowledge. After a point, when you reach a certain age, you find yourself, you have read so much, you have read so many books, and you have studied so many markets and people, and you have seen philosophies and so much of stuff. So all kind of knowledge and information you have, but how to translate that knowledge and information in an effective manner so that it can be utilized properly, so that you can make best decisions of your life. So I was struggling to find that framework, that tool, that system that can help me translate into this kind of thing. Then I realized that knowing something is only a one side of the coin. Until unless you know that how we can translate into this knowledge into a effective decision making, effective thinking, rational thinking, we can't. It is this, the kind of knowledge that we accumulate is of no use actually. So with that curiosity, as I said, I started looking for the right answers. And the most important thing that I found, you might read a lot of stuff on thinking clearly, but the last and most important part of the overall journey was that Charlie Munger's almanac actually. So that almanac, Charlie Munger's almanac, has lot of stuff that address this curiosity, because he himself has said that he has spent his entire life finding solution, finding to improve his thinking ability. He has spent entire life,
Correct.
finding answers to these kind of questions. So I thought the checklist that Charlie Munger has, although he has not mentioned the order in which I have written this checklist and these tools, they are not explicitly described by Charlie Munger. But what I'm trying to say, I found 9 of these tools and techniques that he has talked about on various platforms, including his Charlie Munger's alumni. I bought those ideas from Charlie Munger, and I think that was the starting point. And then I found that this is going to be a valuable part, because, as I said, having knowledge is only one side of the coin. Unless we are able to think properly, and then only you will be able to make decisions that are rational, logical, and prudent. Okay, so that was the starting point.
Okay.
Yeah.
All right. So that's a very interesting perspective. Interesting and wonderful starting point. Many people admire Munger's wisdom, quote his ideas, and follow his speeches. However, admiration doesn't always translate into application. So my next question to you is, what gap did you see in their practical application? Over to you, Jitendra.
So we read a lot of stuff about our thinking ability. There are mental models, books on mental models, how to think clearly. There are books on different subjects. In my view, what most people are not able to figure out is that how to apply these things in a more practical manner, and which is where I think the Charlie Munger's philosophy has translated this theory into how we can actually apply these tools, some of these tools. But knowing something is only, as I said, one part of it. You have to practice it. You have to start applying those tools and techniques, on a day-to-day basis, on whatever that you are doing, whether you are a business leader or you are a student or you are an investor. Those kind of situations will always come on a day-to-day basis. Every day we will face some kind of problem, some kind of a situation where we are supposed to make a decision based on the information. But if we are not able to grab those ideas and think through the various models, various tools and techniques, then margin of safety. It's a very unique concept that was coined by Benjamin Graham, the father of value investor. Margin of safety says that you buy something at below its price, so that there is some cushion if you make error in terms of judgment, in terms of reading something. So margin of safety is something that those kind of concepts, if you apply in day-to-day life, you will be able to make to think through. You will be able to think rationally, logically, and then your decision making would be far more prudent, because you are actually using some of these tools. And of course, as I said, these tools and techniques are proven. The guy I'm talking about, Charlie Munger, who lived almost 99 years, he practiced, and he said these are the ultimate things to apply in our day-to-day life. And who else can be? How do I prove my point? The guy himself has said these are the best techniques, and he has actually practiced all through his life. So I think it is the intention that everybody should have, that I want to use these tools and techniques and apply them on a day-to-day basis. Whenever the situation arises, you have to think about these tools and techniques and look at problems and situation through these tools and techniques, so that you will be able to think properly and make best decisions.
Correct. Absolutely. So that is very interesting point of view, and the distinction between knowing and applying is extremely important. Your book attempts to bridge exactly that gap through a structured framework. So my next question to you is, Jitendra, how did you identify and structure these 9 tools, and which one do you believe is most underutilized?
Okay, so I went through all the literature that is written about thinking ability, and finally, Charlie Munger's work helped me. And based on those thoughts from the Charlie Munger, I narrowed down these 9 tools and techniques. Although there are many ways in which you can help yourself to improve your ability to think properly,
Yeah,
but I thought these lines are important, very important concepts that help, that will do wonders for how you think. So the one of the, as you asked that which one is most underutilized or something that generally skipped from the everybody's mind is probably, you may have heard about this, the power of checklist. uh, there is a book on this particular subject written by Atul Gawande, and it talks about he is a doctor, I know, and he has written this wonderful book, and it talks about the power of checklist. Power of checklist is basically, before you want to do certain activity, you want to make a checklist, whether, like, you want to travel to from one place to another place, or from India to US, you want to travel, you would probably make a checklist, whether I have kept this, I have, do I have my passport, do I have my tickets, do I have my medicines and all kinds of. So the checklist, the power of checklist is something, it's a wonderful tool. Okay, that will help you considerably improve your ability to think. You considerably improve your odds of making good decisions if
absolutely.
you utilize the checklist. Like in investing also, we have a checklist where we say, okay, does this company have debt? No. Does this company have a niche market? Yes. Those kind of checklist, the checklist is something that you prepare for yourself based on your own philosophy and understanding. But
Correct.
checklist is very important, and most people neglect it. But as you grow in this thinking, as you evolve over a period of time, you will realize that checklist is a wonderful thing. And I think the most people neglect it, and this is this is something that everybody should apply, I think, if they want to make best decisions. Yeah.
Correct. So very nicely put through that we to maintain a checklist, proper checklist, and so the understanding the framework is one thing, and applying it consistently is another. And often the biggest obstacle from our own thinking patterns comes from that. So my next question to you is on decision making and biases. What are the most common cognitive biases investors struggle with, and how can your framework help overcome them? I mean, the framework that you're talking about.
Okay, before we get into the topic, I would like to clarify one thing, that this book is not about investing. This book is not just about stock markets and investing.
Okay.
This book, it can be used by anyone and everyone who wants to groom their thinking ability. They want to they want to think properly. They want to improve their thinking ability, and they want to make best decisions. So she may be a student, a business leader, or anybody and anyone who wants to improve thinking ability. So now coming back to your question is, okay, so we have a dedicated chapter in this book where I talk about most important biases, cognitive biases, we as investor, as a simple layman suffer. Everybody suffer from these biases. No, they are not just investors' problem. They are biases which are very common to everybody. Like,
Mhm.
I think the biases, I cannot describe each and every biases due to
Yeah.
here in this platform, on this platform, but what I'm trying to say, one or two biases, like, you must have heard about this sunk cost fallacy.
Hmm.
Okay,
Okay.
in investing, this is very, very tricky. This is very common bias that everybody suffer. But why? Because, let's say I bought a stock at 100 rupees.
Hmm.
Okay, and I bought it. I buy it at 100 rupees, and then the stock goes down to say 80 rupees. I again started to average it.
Okay.
Then it goes to 60 rupees. I again plunge into it and then buy some more. Then
Yeah.
it goes to 40 rupees. Then I again start to buy and
Yeah.
average it, that believing that, at some point in time it will recover. And, it's a sunk cost. This is the typical sunk cost fallacy where, you
Yeah.
are buying more of us or more of something which is losing your money, so you feel endowed, you feel like, you have made it to certain idea, and then you are just keep on investing even if it is not worth doing. Like, you bought a there is one very classic example. Like, you bought a cinema, you went to watch a movie. You buy a ticket from you buy a cinema ticket at 500 rupees. You entered into the movie hall, and then you're watching a movie, and all of a sudden you realize this is the worst movie you have ever encountered.
Yeah.
Okay, you feel like, this is not the movie I want to watch. The movie is worthless and everything, but you don't want to leave that hole because you have invested 500 rupees in that movie.
Yeah.
But what, I mean, you can just simply walk away, walk out from the hole, and say, okay, let it be. I invested, I lost 500 rupees, but I gained my 1.5 hour. In that hour I can be at peace. I can be at with myself. So that's a precious. The time is equally precious. So it's a typical psychology. You sometimes, this is called a sunk cost fallacy. You have invested in something and you don't want to see that it is losing, so you just stick with that. But I think it's a classic cognitive bias, as we discussed. And like that, I have discussed, I think, 10-15 biases in this book, in a particular chapter that is dedicated to these biases. Yeah.
Very interesting. This is I mean, your disclaimer was really fantastic. And because in our day-to-day life, I, as an investor, also made similar kind of mistakes where I bought a share, it went down, bought again, and kept buying it till, so very nice response from you. And these biases are really important that we must. So it is what you said is highly relevant, and especially in today's market where emotions can often overpower rational thinking. So let's bring this from concept to reality. And so my next question to you is, can you share an example where applying one of these tools significantly improved an investment decision? Jiten.
So, yeah. So I think there is one more concept that Charlie Munger has talked about, that is called as inverse thinking.
Okay.
Inverse thinking is basically you are reversing the problem. You are reversing something and then thinking from the backward, from back to start, rather than thinking from the start to back. So, like, this is a powerful idea. Like,
Yeah.
when you want to invest in a company, rather than you say, this is good company, it has good margin, it will compound over a period of time, the management is prudent, capital allocation is sound, all kinds of positive. Okay.
Yeah.
So you have nothing to debate about. Okay. But Charlie Munger says, okay, that's okay. You have all the positives. You agree with whatever thinking that you have about a subject, about an investment. You reverse it. You take a reverse look. You completely take a diversion and think from the back, from the this is called as the reverse thinking. Reverse thinking is basically, you are reversing your assumptions, so you are questioning. Otherwise, who is going to debate whether this investment is good or not? If you believe this investment is good, it is good for you, and by the time you lose money, nobody would come and tell you that you have made a mistake. So rather than waiting for the disasters to happen, you actually try to see the disaster before it strike you. Okay, so you actually question your own assumptions. How do you question your assumption? Like I said, you said this company, the management is prudent.
Yeah.
You rather than saying that the management is prudent, you start saying that, how can management make mistakes? What mistake management has made in the past? Can management go wrong? Can this company got enough moat? If are those moats supported by the tangible benefits? Okay, so everything that you agree with, whatever assumption you take, let's say I assume 20% growth based on whatever factors that I believe, because of the new capacities, new markets, new geographies, and under penetration market and all. Rather than saying that, I got all the answers, you start thinking that I got all the answers, but I want to recheck them. I want to reassess those assumptions, and not thinking that it is going to happen. I would ask a question whether it is going to happen or not. Okay, so it actually force your mind, which is in a loop where it is the mind is in positive loop. It is going in a direction where you have already decided that you want to invest in the company.
Correct.
Everything is fine.
Yeah.
But all of a sudden, you stop your mind saying that, no, wait. I want to recheck my assumption. I want to reassess my assumption. Whatever you said, my mind, whatever you said, I want to recheck them. I want to question them as a opponent of myself. You become opponent of yourself, and then you are able to see the other side of the coin. You are able to see the disaster which may or may not happen, but you are thinking from the multi-layer perspective that this can happen, or if at all it happens, then what do? You are prepared for that.
Yes.
So this is a wonderful tool, and I have talked about this in one of the chapters, and I think it is very important that we question our own assumption. We sometimes have to become opponent of our own self, actually, and this is wonderful.
Correct. Absolutely, Jitendra. So that was a nice perspective again, and the examples that you gave are like that make these concepts come alive. But today's investors face very different environment compared to even a decade ago. So my next question to you is, in an investment driven by noise, speed, and short-term termism, how can investors build discipline using these tools? Over to you, Jitendra.
Yeah, so we see, if you want to evolve, see, it's all evolution. You have to go through the different cycles. When you are a kid, you are learning. You are storing information and knowledge. When you become little young, you want to use those information knowledge in a proper manner. So it's a evolution, and the part thinking, grooming your thinking ability, making best decisions is part of evolution. You have to, over a period of time, you will actually realize that you have to have a framework where certain things and certain decisions, certain activities go through a framework, a system where they are checked, they are thoroughly understood. Then they become viable, they become strong, they become sustainable, they become structured. Okay.
Absolutely.
And when all these attributes are there, whatever you are doing in your life, it will be solid. It will be sustainable, it will be solid, it will be appreciated. You will have better grip of what you are doing, whether it is investing or running a company. If you know what you are doing, then you have a grip, and when you have a grip, you have a better control of what you are doing. So like in anything and everything in life, investing also require a grip. Okay. That grip comes when you know more than what other people know. Okay. And that grip is comes with the mindset of progression, with the mindset of evolution, where you want to to evolve to a point where it is not just the informations and knowledge and the data, not the Excel sheet, not the books that you have read. How do I combine all the stuff that is available in the world in a system that helps me make better decisions, that helps me analyze situations, that helps me identify the traps, that helps me identify the best companies of the world, that helps me identify the best management. So I think this is very important. As you grow, you have to have those kind of systems.
Yeah. All right. So this is the first part of our conversation with Mr. Jitendra Gupta. Stay tuned for the second part as well. Thank you.